Airline stocks experiencing some turbulence. The real question is, will they come and retest their 2020 lows? We'll come in here, take a look at United Airlines specifically. This one is not too far off of its 2020 lows after they reported Q3 earnings earlier on in the week. And we'll also take a look at other names within the airline industry sector and see how they have performed. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. United Airlines, ticker symbol UAL, was down roughly 2.5%. I'm recording this at the end of the trade on Friday. During the week, it was down close to 10% after reporting earnings in the middle of the week. Year to date, United is down roughly 6%, and over the past 1 year, down close to 10.5%. Now, the struggles are not just with United Airlines. All airlines within this sector are really struggling this year. As you see, Delta over the past 1 year is up just 1%. Southwest Airlines down close to 26% over the past 1 year. And then American Airlines also down nearly 20%. You see the S&P 500 in that same period is up over 15%. And so this entire sector has been really struggling over the past 1 year. And you see all these stocks perform relatively close to each other. On the way up, some might outperform, and then same on the way down. Roughly, United Airlines is sort of in the middle of the group, as it hasn't outperformed on the downside or on the upside. And so we'll come in here and take a look at the numbers. Now, operating revenue coming in at $14.5 billion for United. This is for their Q3 2023. Year over year, that was good for 12.5% revenue growth. So decently strong revenue growth in this most recent quarter. This was the end of the summer travel season, and travel was quite strong this year, at least compared to last year. And so revenue's up 12.5%. Now, United does give the average fuel price per gallon. And so in this most recent quarter, they were dealing with fuel prices close to $2.95 per gallon. Now, a big reason the stock sold off was because they cut their guidance. So for Q4, United is seeing average aircraft fuel prices per gallon coming in at $3.28. So a big jump quarter over quarter on fuel prices. And all these airlines, yeah, they have to deal with that fuel price. And if those fuel prices go up, that is going to be reflected in their business model, and those are going to eat into their earnings per share. So taking a look at operating revenues, that was close to $14.5 billion, good for 12.5% growth. You see on a 9-month basis, we're still growing at 23% over at United, and so fairly strong growth expected. And then even in that upcoming Q4, revenues are expected to be in the range of $13.6 billion. Now you see earnings over the subsequent quarters are expected to absolutely shrivel up, and then in Q1 of 2024 go back negative. And we'll see the big reason for that is surging fuel costs and high inflation making labor costs extremely expensive for these airliners. So we have our operating expenses. You see salaries and related costs, that was up nearly 40% year over year, up to $3.9 billion. Same time last year, we were sitting at $2.8 billion. On a 9-month basis, this was up 30% year over year. So you see salaries and related costs extremely high for these airlines. And really, we'll only cover United on the channel today. But look, you can extrapolate and apply these numbers to really all the airlines, because if salaries and fuel is up for United, well, guess what? It's going to be up for Southwest. It's going to be up for Delta. It's going to be up for really any airline. Or even in Canada, if you take a look at Air Canada, they would experience the same things. And so all these airlines, you can kind of extrapolate these numbers, and they sort of perform relatively in the same fashion. So you see aircraft fuel was actually down year over year. Compared to fuel costs last year, we have aircraft fuel going down, but it still remains elevated. And we know last year fuel prices were sky high, pun intended. And so even though they've come down roughly 11%, it's not the decrease that I'm sure these airliners were hoping for. And then considering the fact that they're expecting fuel prices to go up substantially in that Q4, that will certainly hurt the ability to control costs on that fuel side for these airliners. And one of the reasons for gas prices going up is due to the conflict going on in the Middle East. And that's also another thing that's hurting these airliners, as they've stopped flights, incoming and outgoing flights, to Israel. And most of them mention that how that will affect their bottom line. Now, United is a bit more exposed to international travel, especially even to the Middle East, compared to, let's say, an American Airlines. And so certainly the impact of ongoing conflict in the Middle East will hurt a United more than an American Airlines. But something like a fuel cost, something like salaries going higher, yeah, that will certainly affect both companies just as much. And so you see operating expenses went up roughly 12%. So on really every other line, United did do a good job controlling costs. It's just mainly salaries and fuel costs remaining extremely elevated. Their operating incomes did still increase nearly 20% quarter over quarter, coming in at $1.7 billion, coming down to their bottom line net income coming in at $1.1 billion. That was still good for 20% growth, as last year we were sitting closer to $950 million. On that EPS side, United posting earnings of $3.42. Now for the last 9 months, they posted earnings close to $6.08. That is up substantially from the same time last year, where they were earning a loss of 33 cents on a 9 months ended. So if you take out the whole year, yeah, United is in a much better spot, at least on their statements of income. Now, taking a look at their cash flows for the 9 months ended September 30th, they generated roughly $7.8 billion of operating cash flows. Again, that is substantially better than what they were doing back in 2020, where they were closer to $4.9 billion. Now they do have to spend a boatload on net of flight equipment and deposit returns, and then they spend a ton on purchasing short-term investments. And so they used up roughly $5.3 billion in investing activities. Then they use another roughly $1.7 billion in financing activities. So United and really all these airliners have a ton of debt, and we'll take a look at that on their balance sheet. And so they paid off roughly $3.4 billion worth of that debt over the last 9 months. They did issue roughly $1.6 billion worth of new debt, and so some of this was probably just refinanced. And so all things considered, United paying off roughly $1.7 billion worth of debt over the last 9 months. Now that certainly is not a lot compared to how much debt they have, but at the same time, if they have to invest close to $5.4 billion of their $7.8 billion worth of free cash flow into investing activities, yeah, they don't have a ton of free cash flow left over in order to do debt repayments. Now, United doesn't pay a dividend, I believe. Yeah, they don't pay a dividend, but I know some other airline companies do pay a dividend. And so for them, this cash flow will be even more crucial, as they'll likely have to pay a dividend along with repaying their debt. Now, taking a look at their balance sheet, United's balance sheet certainly isn't great, but let's be honest, none of the airlines have a great balance sheet. They're sitting on roughly $7.5 billion worth of cash equivalents, and another $9.6 billion worth of short-term investments. That brings our total current assets at just under $22 billion. That is fractionally up from same time last year. Now, taking a look at their liabilities, they have nearly $24.7 billion worth of current liabilities. And so right there, they have more current liabilities than assets. That's not a great thing. Taking a look at how much debt they have, United has nearly $3.6 billion worth of current debt. That is their current portion of their long-term debt. And so within the next 12 months, United will have to pay off a substantial portion of their long-term debt. Along with that, they're sitting on still nearly $26 billion worth of long-term debt. And so on their statement of income, they're paying a boatload of interest expense. Yeah, you see over the 9 months, they've paid off roughly $1.5 billion worth of interest expense. Considering their operating income over the last 9 months have been $3.2 billion, they're paying nearly half of that in interest expenses. Now, they do earn some of that back in interest income. However, that's still a big number considering how large their debt is in this high interest rate environment. Certainly, interest rates are not in the favor of airlines, and that is hurting their balance sheet and hurting their cash flows. So for United, cutting down this debt should be priority number one in order to bolster this balance sheet. Now, moving on to the stock chart for United. The stock chart doesn't look great, to be honest. Taking a look back at its 2020 lows made during the COVID pandemic, yeah, United was closer to $23 per share. Today, it is nearly at $35 per share. Over the past, we'll call that 1 to 2 months, the stock is down nearly 37%. And so United coming close to a support level, I would want to say close to $32 per share. Certainly it has the ability to kind of bounce off of those levels and maybe push up higher in the short term. I'm sure it is very oversold based on the RSI. And so I wouldn't be surprised if United comes down close to $32 per share and sees a technical reversal. Now, near the top end of this range, I do think it will see a ton of resistance on the way up, closer to $44 per share, even at $40 per share. And so United will hit its head on its way up, certainly. Personally, I do think a stock like United can come down and see its lows of 2020 near $25 per share. And so it wouldn't surprise me if United comes down to these levels, considering how bad the news is over the next few quarters, considering nearly all these airliners are slashing their guidance, and considering their earnings are expected to once again turn negative. And similarly, if you pull up a chart of Delta Airlines, it's really facing the same thing. You can take a look at a Southwest Airlines. This one looks even more uglier, and you see it has actually just now come down and tested its 2020 lows. And so for a United to come back and retest those lows certainly wouldn't be out of the question. Now, in my opinion, I am not really interested in any of these airline stocks, as they frankly have too much negative news over these next few quarters. Really, I think the summer of next year can be a strong traveling season once again. And until then, they are going to face headwinds of rising fuel costs, rising salaries, and cancellation of flights to different parts of the world. Now, what you can do, and if I was to come in here and invest in this sector, this is what I would do, is take a look at this US Global Jets ETF, ticker symbol JETS. Not surprisingly, its top 10 holdings consist of Southwest, Delta, American, and United. And so right there, you kind of get a broad exposure to this industry without taking on the risk of a single airline stock, which in my opinion, I think is quite risky. For this sector, betting on a single company, a lot can go wrong. And yes, it's always the case that some companies will outperform the others in their sector, but I think that's what you get with an ETF, is the security of kind of following the rest of the industry along. If you take a look at Jets' performance over the past 1 year, it's relatively in line with the others. As you see, it's down nearly 7.5%, almost identical to a United. And so on the way up, you'll sort of get muted gains, but certainly as well on the way down, you don't see your capital depreciate as fast as maybe a Southwest or an American Airlines. So in my opinion, I think the US Global Jets ETF is a great way to play this industry. Still, I would stay out of this in the near term. I think there's still a lot of headwinds surrounding these airline companies, namely rising fuel costs and extremely high salaries and labor costs. And until those start to come down, until these earnings expectations begin to once again climb for these companies, it will remain a tough macro environment for airlines. That was my take on United and the overall airline sector. Let me know your thoughts in the comments below. As always, thanks so much for listening, and I'll see you guys in the next video.